we could see a fairly large number of homes enter the marketplace all at once as people are all kind of going, okay, I'm good. We made it through 2024. Let's do this. Like, let's get it going.
Welcome back, ladies and gentlemen, to Life at 10 Tenths, where we inspire you to live at the pinnacle of your ability and purpose. He's Garrett Fry, I'm Matt Pinelli, and you are you, and we love you. And thank you so much for tuning in to us, guys. Day over day, podcast over podcast. Man, we appreciate you guys tuning in and embracing the value here because we love doing this. Garrett, like, we do this podcast because it's fun for us. We started podcasting, gosh, over 6 years ago, 5 years, 6 years ago, almost 6 years ago now, actually over 6 years ago. And it's been a fun ride and journey. It's so great to now do it also on our own brand, which is really cool. And so we appreciate you guys tuning into this and hope you guys get some value. And if you do, please give it a share. Garrett, good morning to you, sir.
Good morning, sir. Good morning. I'm excited to go through a kind of a little different adventure today, talking about, I'm not a big predictor. I don't like saying here's what's going to happen, because when you start making predictions on things like the real estate market and the real estate world and let's just say human behaviors, good luck.
Yeah, exactly. But it is fun to talk about other people's predictions, which is kind of something we are going to do today, because the talk has been, and we're now, you're listening to this in 2025. But at the time of recording this, we're going through these housing market predictions for 25 by all of the different sources. Everybody's weighed in, from NAR to Realtor.com to Housing Wire to Fannie Mae. And everyone is talking about this rise in inventory that's going to happen over this year, along with some other things. In fact, like almost everything has a plus sign next to it in terms of the predictions. Maybe the mortgage rates have an equal sign next to it, right?
Yep.
But let's talk about this inventory number, Garrett, because it seems like some realtors are a little bit freaked out by this, but it kind of needs some full context.
Yeah, I'm probably going to talk in a lot of analogies today. I'm just going to prepare people like right up front, because Matt, as you're talking here, I just had this analogy of I live in the state of California. I'm in Northern California. Our entire life revolves around water, and if we're going to have enough water, and if you can water your lawns or not water your lawns. And you can tell our state of our water by the reservoir that's just to the north of us. And this thing drops like hundreds of feet every year and then fills back up. And every year, every couple of years, they're like, it'll never be full again. You'll never see it full in your lifetime. And I'm always like, give it a year. Give it a year. It'll be back at the top again. Like, calm down. And it does. About 7 years, we have a brand new full lake again. Everyone's like, oh my gosh, it's full. So here's the interesting thing. I think when we're talking about the inventory levels in the real estate market, what they can predict right now is the potential inflow of what they're hearing. And it's what I'm watching right now. It's what all the people that I'm working with, what I'm hearing from them is things like, oh my gosh, my first quarter, I'm going to have more homes go as new listings than I've ever had before. Everybody's waiting to the spring. I got this huge list of people that want to list their houses and get them on the market. I can only hear that so many times before I'm like, okay, this could get interesting here in the upcoming handful of months. Like, we could see a fairly large number of homes enter the marketplace all at once as people are all kind of going, okay, I'm good. We made it through 2024. Let's do this. Like, let's get it going. But I think what's interesting is that what they don't talk about, and what is really hard to predict at this moment in time, and I'm going to go back to the reservoir right now, is how much water is being let out on the other side. So our reservoir has Shasta Dam is at the end of this Lake Shasta. And Shasta Dam, they have control over how much water they want to let out. They can open up those floodgates and let that water dump out the other side. They can also tighten them down really tight, and then you watch the water levels rise all the way to the very top. Now, if we look at the housing market, let's just say what everybody predicts when they hear the inventory, Matt, is this lake at crest, like full. Oh my gosh, we have all this inventory. Like, it's just sitting here.
It's going to dump out over the mountains.
Nobody's talking about yet, because it's hard to predict what is going to be the buyers that are going to be saying, okay, guys, let's crank this floodgate open on the end and let's let this inventory pass through. And only the buyers are the ones that can do that right now. We don't know what that's going to look like. We don't know if the buyers are going to be in the marketplace going, hey, I feel confident and comfortable to buy. We don't know if they're going to be sitting there going like, hey, because of external things going on, am I going to hang on to my money and wait? Like, we don't know that right now. And that's going to be the interesting factor. So I think as of right now, everybody going into this, like, what we know is there's going to be more homes coming into the marketplace. That I feel pretty confident in saying just from what I'm seeing on the ground right now.
Yeah.
Does that make sense, Matt?
It does make sense. And what's interesting is when you start to dig into the predictions, people will talk about, well, what's going to happen with home sales over the next year? Because, gosh, we've had these 2 years of really low existing home sales and even new construction home sales a little bit lower than they have been. And you have this wide range of predictions, right? With NAR really on the top end of saying like, hey, home sales are going to increase. I think they're talking about 10 or 11% year over year for 2025. At the same time, they're saying, well, but inventory is going to increase by this. And so it's like, okay, inventory increases, home sales increase, median price is also projected to increase. Well, what does all that mean? And the demand side, you're right, Garrett, is kind of the illusion because we don't know. It's hard to measure demand other than surveys and asking people, are you thinking about buying a home? Same thing with listing and the sellers hitting the market, but there's kind of more data behind there. And maybe as companies have these buyer agreements, maybe there will be some stuff released there. And we look into Mortgage Broker Association too of like, okay, well, what are the pre-approval rates in terms of people signing up for new pre-approvals and things like that. But at the end of the day, this isn't a commodity that sits on a shelf where you can say, hey, the inventory is this. And if you want it, all you have to do is walk up and buy it. Mm-hmm. Because with that rise in inventory too, the question that I have is, are people going to position their homes appropriately so that it meets the demand where it's at? Because if the buyers are there saying, hey, I want to buy, but they don't see the inventory that they want to buy, are they going to go and try to negotiate? Because it's not as easy as walking into Target, just grabbing something on the shelf and walking out and going, okay, cool, we can measure this flow of inventory. It doesn't work that way in real estate. That said, Garrett, when we look at inventory rising, I think it's a great thing, right? If these predictions are true, I think everything looking at 2025 looks at a healthy real estate market in terms of how supply and demand can operate. This is not talking about affordability at all.
But this is my question to you. Like, is it easy to predict a rise in inventory? I think it's easy to predict an influx of flow of inventory. But we don't know if it's going to rise. So I think, like, if you're talking,
if demand then it absorbs all that quickly, then you don't have a rise in inventory.
Yeah,
right?
Because if the buyers are there and they're like finally, and when I say open the floodgates, what that means is they are making offers and they are putting homes under contract and they're not allowing them to collect in the reservoir. The reservoir, when that thing collects, that's when we all sit around going like, oh my gosh, look at all the competition that's out here. We're putting your home on the market. And, normally we would have like 2 homes you're competing with, but you're competing with 100 homes now. That is a rise in inventory. That's a hard one to put your thumb on and say we're going to see a rise in inventory. We know we're going to see a rise in the influx, at least from everything I'm watching in real people in real time. But be careful about telling any of your people we're going to see a rise in inventory, because that means that we have available inventory sitting there. And I don't know. I actually think we have some fairly confident buyers out there right now. I think we have a lot of buyers waiting in the woodwork for the right properties to come through. I think we have a lot of people that are getting over just wait till the rate drops. That's when we'll come and do this. I don't think that's a thing on the table for a lot of people right now. There's a lot of buyers that the consumer confidence coming through 2024 was horrible. It was horrible with all the stuff going on and all the things. There's a lot going into this new year that I'm watching buyers go, okay, let's do this. This is my year. I'm going to make something happen. I'm tired of waiting around. We waited through 2024 trying to get confident. It's one of the reasons we saw so few deals pass through in 2024, so few opportunities. So
It is.
That's what I'm excited to see.
I agree. And while you were talking, I was kind of looking at some of these reports and stats and quotes and things, because
I don't know
when
how you do that at the same time. How do you do that? I have tried. I can't even type on my keyboard and podcast at the same
I had
time.
them already pulled up before we started recording, so it made it easier on me.
All right.
I just made it seem like I was doing it while you were talking to kind of give the allure of like, hey, but
It worked,
since I knew
dude.
we were
Fooled
talking
me.
about this.
I'm sorry to blow your cover out there, Matt. Well done, dude.
Totally just, man, gosh, the secret's out. But
Okay.
What's interesting is you look at like, okay, NAR says, okay, we think these different buyers are going to emerge, right? And it's like, okay, well, what does that mean, right? Oh, all people skipping the mortgage because all cash buyers surged over the last year. We think that's going to continue. Oh, and the first time home buyers are also average getting older, which means what? In particular, I don't know, but they're saying that, oh, these are going to be different types of buyers. So first time home buyers are going to have higher down payments because they're older and have more savings. I think we got to match that against what are the consumer trends out there, because I don't think people are actually saving more money.
Well, we started talking about it, and we're going to do a whole episode on the profile of home buyers and sellers. But one of the stats that we were talking about in there is that last year was a record low on recorded history. I think since they track their numbers.
Oh yeah,
of first-time home buyers buying homes. There's a pool of first-time home buyers out there going, we didn't do it in 2024. Like, I have a feeling we're going to see a wave of first-time home buyers going, okay, now we're ready to do this.
Yeah, and kind of the inventory and all that. Also, you have to look at what is the availability in the multifamily market as well. Because if there's a lot of availability in the multifamily market, meaning rentals, then a lot of those first-time home buyers might rent for another year, depending on what that looks like, right? But what's interesting is you take what NAR says and now go look at what the National Association of Home Builders says, right? And of course, they're going to be all about new construction. They're saying, well, we think that most of the inventory is going to come from new construction, right? New construction hitting the market is going to contribute to the majority of the inventory rise. Because
they better start building in Reading. I don't think that's not the answer for Reading, but I'm listening.
Right. And then, you have Fannie Mae saying, well, we think mortgage rates will decline a little bit, but then you have the Home Builders Association saying we don't think they're going to decline enough to make any type of impact on what's going on with home sales. And it gets confusing, Garrett.
Yeah.
And what I think the interesting part of this is, and actually this is a new one for me right here. Fannie Mae just released their predictions the week of us recording this, and they're actually predicting that rent growth is going to ease a little bit. In terms of the rent prices, which will be good, because I've heard in some places that rent is just crazy.
Oh, people are getting squished.
But when you look at all this, the question then becomes, cool, there's all these predictions. What does it mean for me and my business as a realtor, Garrett? Because that's what when people say, oh, inventory is rising, which is where we started this, I hear realtors go, oh my gosh, it's going to be so hard to sell these homes because there's too much inventory coming on. Like, what's going to happen? But what does it really mean for the agent?
Yes. Okay. So I have the experience of selling homes in a marketplace where we had 34 months of inventory. And think about that, like 34 months of inventory. And most agents right now in the marketplace have experienced somewhere between 2 to 6 months of inventory. That's something that they can wrap their heads around. They can be like, okay, I understand this. And when we start getting up to 6 months of inventory, they're like, oh my gosh, like the market's kind of flooded right now. So picture this, 34 months of inventory. I have actually sat down with a seller at their house and said, we may not sell your home this year. It's a pretty good chance we're actually not going to. If we do everything right, we might not sell your home this year. When I've done listing contracts with people, I have done, let's do them for a year, because I don't want to have to come back in 3 months and have a new listing contract signed and to be able to, and it wasn't my ability. It was a marketplace that had just pulled the emergency brake and everybody's like, we're not buying. And these poor sellers just sat out here and sat and sat and sat. 34 months of inventory. So I think what's interesting right now is that in those marketplaces, you still could sell your home. You still could make real estate happen. There were still buyers there. And that's an extreme high inventory level. At the same point, real estate still happened. We still help people get to where they need to go to. I still sold my home in 30 days in that marketplace, and I had to do some extreme things. I had to do stuff that was going to make that home stand out. Luckily, I'm a professional. But I also hired a professional. I had my friend Mark Johnson be my realtor through that because I'm like, dude, I as a homeowner am skewed and broken. I have emotional attachment to this property that I remember on the phone with him in the front yard going, I have so much emotional baggage with this home that I love so much that I'm selling that I'm not thinking clearly about how am I going to present it to the marketplace and market this thing and put it out there because I think it's worth $1 million. And Mark's like, maybe 350, like maybe. And you need somebody as a professional in there to be able to analyze this and look at this. And this is what all of you are listening out there. Most of you are listening out there. Like, this is the beauty of being an expert in this industry is you get to help people through those times. I don't know if we're going to see inventory levels anywhere near that. That took the banks failing, consumer confidence going out the window. That was back in 2008, 2009, 2010. Hopefully we don't see that again. But even if we do get into inventory levels, let's say inventory levels really rise. Let's say we get 10 months of inventory. The thing that led me to this podcast today, this episode, was I had somebody that was fearful of that. And I said, you got to imagine that you're driving down the road at 100 miles an hour. And let's say 100 miles an hour is an inventory level of 2 months. Okay, we're cranking down the road. If we slow down to 50, which let's say would be a 6-month inventory level, it feels like we are crawling. It feels like we're barely moving. And it's scary. And it's like, what do we do if you're if in the real estate market, you're obviously going to be going like, how am I ever going to sell a house? It's like, no. This is actually still a pretty good clip. We're still moving along fairly well. This is really still what we consider a neutral marketplace. If we go up to like 34 months of inventory, the analogy that I had in my head was when you come off of a racetrack and you pull into the pit lane and you're going from 100 miles an hour to now you're going 10 miles an hour. And you can't go over 10 miles an hour because you get penalized, which is a funny story behind that, which I'll have to tell everybody at the very end, Matt, so don't let me forget. But if you get penalized as you go into the pits, at least in the races that I'm in, like, it's hard to drive 10 miles an hour. It's really hard. It is painful. Like, you feel like you're doing something wrong. The car doesn't want to work right. Like, nothing works right. It's just clunky and messy. We're not even close to that. It's going to take so far to get to that type of marketplace. What we're probably going to see is it go up. If it goes up to about a neutral type marketplace, there's too many buyers out there right now. It would take a lot of inventory, Matt, to push it into a lot of inventory, or we're going to have a lot of inventory.
Well, yeah, it definitely would. And even when you slow down to 50 or 10, you're still moving forward, right?
100%.
And, you know, I look at, okay, if inventory rises, that means more options for buyers. And at the same time, as we just said, the predictions are also saying home sales could potentially rise as well, which, coming off of the lowest existing home sales since the 90s, that sounds pretty good. Who cares about the inventory? Now, if you're a listing agent, you obviously want to make sure you position properly so you sell those properties, right?
Home prices can only rise, though, Matt. For what reason?
Well, because demand, the supply and demand is swinging in a certain direction, which
that
means
statement right there says buyers are, if they're predicting home prices are going to go up, it means buyers are there to buy. That's the only way that can happen.
Exactly. So we have more home sales, higher price point. Who cares about the inventory levels? Almost, right? Because, and I look at this, and agents get really worried about this, as we kind of talked about on our a recent podcast a few weeks ago, last month, actually, it was
recent.
And an agent's business is such a small portion of the overall market share. If you are predicting your own business based on the market predictions, we have a problem, because your business should be predicated and predicted based on what are the actions and input you're going to put into making things happen for you and your clientele. If you focus on that, the market can do whatever it's going to do. agents were thriving in 2008. Many were not, but there were agents who were thriving in 2008, 2009. Same thing in 2011 or 2021 when almost it seemed like everybody was thriving. There were agents who were struggling to keep up and try to find business, even though there was an abundance of home sales. And just recently, as we wrapped up 2024, Garrett, we talked about agents who had their best year ever in a year where there was the lowest number of existing home sales that we've seen in a long time. So don't let the trends and predictions change how you're operating. As the only thing I see out of these trends, Garrett, is what it says to me is, hey, we need to continue to be really, really diligent with our listing process to make sure that we position listings accordingly, because if there is an inventory rise, that means there's going to probably be more sellers who don't sell in this next year, even though home sales will go up. And so for those sellers who are listing their homes, the question is do we have real sellers, and are we helping advise them so they can position correctly in order to be the listings that do sell? That's the way I look at it.
Well, and you're on the right page, Matt. And I think that, if you're making a business that's like, hopefully interest rates are low enough so the buyers want to buy. Hopefully there's enough demand out there so my sellers can want to sell. Hopefully there's all these things out there. And if you really are building your business correctly, it means that you're building it off a group of people that what you need to know about them is that their life changes are going to happen no matter what. And as those life changes, by the way, they don't give a rat's over what the interest rate is currently right now when they are stuck and they need to solve something for their family. They don't care that it's the best market to sell in or the worst market to sell in when they need to sell a house. The amount of people, Matt, coming out of 2024 that I have talked to, not my personal friends, but my coaching clients that I've talked to that have said, I guess they are my personal friends. I'm sorry, guys. Anybody's listening who's my coaching clients, that came out wrong.
Ooh.
I love you guys. But what I'm saying is that their clients, what they're saying, they're hearing is people that are going through divorces right now that are still living in the same damn house together because they're afraid of how they're going to handle the marketplace. Do we sell right now? Do we stay right now? This is too confusing. You take the upstairs, I'll take the downstairs, and we just won't talk to each other. That's happening right now. I have 3 stories of that in the last couple months that have come out for me. I was talking with a gentleman yesterday, and I used that as an example, and he goes, I got friends that are doing that right now. That's miserable. And those life changes can only hang on for so long until someone's like, I don't care if it's the perfect time to buy or sell. I don't care if we're $300,000 underwater right now in this house. I want out. I'm walking away. I will figure out the collateral damage that happens around this as we figure out our rest of our lives, but I'm moving. That's what predicts most movement in most marketplaces. Again, interest rates will spark flares of business. Other things will start flares of business. But when you look at everybody buys and sells and moves on average every 7, and I know some people go, it's 10, whatever it is, 7 to 10 years, it's pretty predictable. That is life changes happening. That is all that is. That is not this outside influence making real estate markets flare up.
Yeah, no, it's not. And I'll say, I think when the stats that I personally would probably pay more attention to, because I think these can help you advise people, is, not necessarily the housing supply and demand, because that's a result of something that's happening in someone's life, as you just said. So then what are the factors that would drive people to want to buy or sell? Is it really interest rates? Is it really housing inventory? Is it really pricing? Sure, those things are a factor when it comes to affordability, but what else is impacting affordability? And I would look at things like consumer debt and consumer spending, because we're approaching an all-time high as of Q3 of 2024, non-housing debt, meaning if you take out the mortgages, right? It was approaching $5 trillion in the US, right? So that's a lot of debt. And you look at the last year, auto loan debt has risen, credit card debt has risen, student loan debt has risen. Okay, great. Those are the things that probably people are wrestling with when it comes to their finances to better understand. is it worth me trading this 3% rate for a 5.5% rate? Those are the things that people are facing when they're going through a divorce and living in the same household. It's not the house that's probably saddling them. It's other things. And I'm not saying you should get involved in people's lives that way, but if you understand that, it can allow you to have better conversations so that you also know whether you have the right buyers and sellers you're working with and how you can help them navigate the real estate market. I think those are some important stats, Garrett, because that leans right into the life changes that people experience.
Well, and I pulled off a miracle while we were sitting here. I was listening to you. Is that I actually looked up something on the computer at the same time while doing the podcast, and
This is incredible.
it is a moment. If anybody's taking notes out there, celebrating little wins in Garrett's life, this is one of them. But I looked up Lending Tree credit card debt graph for 2024, and if anybody's taking a look at this right now, like these are interesting things to look at. Of like, what is going to cause people to have to make changes in their life. And this one's simple. It's 1999 to present right now, and it shows a nice, beautiful green line. And if you go back to first quarter of 1999, now this is in billions. So it was like, between 400 and 500 billion dollars in credit card debt is what we're looking at here. It's upward in the range of, oh my gosh, because it's showing me in 400 to 500. We're in between 1.1 and 1.2 right now. Trillion is where it's sitting. So when we look at this, like this, you can go back right down to 2021 and watch this thing climb. And I've been watching this climb. I've been paying attention to it kind of like in my peripheral here for about the last 6 months. And you can watch it go up and then it dips, and it dips with the quarters. And I was going like, oh, look, it dipped. It's starting to come back down. I was like, oh, no. It does this. And if it's on a trend, it's going to turn and continue to go back up. This thing is going up at a crazy rate right now. People are collecting credit card debt. They are collecting, we keep hearing about this out here. And one of my friends who's a lender, he actually said to me, he said the biggest challenge they're having right now with buyers is that they have spending problems. We have people that are coming in that want to buy, but they are not taking care of their finances. But on the flip side, everybody goes, oh, that means buyers can't buy. It also means buyers that currently own their homes are going to need to sell to free up equity to get some of this debt off their record and change their spending habits. They may not move up to the dream house. They may move down from the house that they like.
They may move into a rental.
To a home that they're like, you know what? We still own a home and we're here, and this is going to be our home for the next 5 years while we get ourselves financially secure and stable again. People make these decisions all the time. And I think I had a coaching call the other day that I had to go down these lines of like, not everybody's buying their dream home. Like that I've got dream homes I want to buy right now that I don't live in because I can't afford that house yet. And there are people right now that would love to have the 10-car garage, but they're going to have the 2-car garage. And there's people that would love to have the 2-car garage, but they're going to have a damn carport because that's what they can afford right now. And they might be downsizing to a house with a carport to make finances work. This is reality of humans' worlds. And I think as all the realtors out there that we know, Matt, and the people that are building businesses, make sure you understand what drives this stuff, because once you understand that, you can find a lot of safety and security in this market and your business and where you're going and what you're growing to.
I think it also just helps you optimize your processes when you're discussing opportunities and goals and things with people, right? Because at the end of the day, there's going to be plenty of business for everybody. If you choose to run your business in a certain way, which is based on driving conversations, bringing value to people so that you have the opportunity to serve folks. I'll bring in one more stat, Garrett, since we've been kind of going all over the place with data, and I love data. And you mentioned the first-time home buyers, and we are going to do a podcast fully on that report from NAR, the profile of home buyers and sellers. But you mentioned that first-time buyers at an all-time low, right? And there's probably a correlation here. But if you look at student debt over the past decade, it's ballooned from 0.2 trillion in 2004 to 1.6 trillion in 2024. Interestingly enough, the growth this year has been less than the growth in prior years. But you look at, okay, people who were accumulating student loan debt from 2010 to 2020, which was like kind of this sharp upslide here.
Yep.
Those people are at first time home buyer age. And that student loan debt, depending on how it's structured for them, is impacting their affordability because that changes the income to debt ratio, which changes the payment that they can qualify for. And when you have home prices rising, that impacts affordability, right? And so just understanding that for me in my mind makes it like, okay, cool. Now we can kind of understand the demographics a little bit. So when you're out there and engaging and looking at your avatars of your ideal customers and everything, one, you can look at, hey, how do I help these people understand that situation? How do I help first-time home buyers figure out their finances? How do I connect them with a financial advisor to see how they could package their debt in a way that allows them to have the affordability for a home, right? Or you can look at it and say, cool, that's going to be a really tough demographic to work with. So I'm going to switch up my avatar and focus on this group over here because this seems to me like the people who are going to be really buying and selling homes in my marketplace. And that way you have data, you get to deploy it in the ways that you see fit to help your own business grow, because no matter what, there's going to be plenty of deals for you out there if you choose to really lean in to run your business like a business.
So I have another prediction, and I've been looking up more stats while we've been sitting here talking, Matt.
See,
and,
it's addictive, isn't it?
I'm on a roll now. I think I figured it out. It's a different way to use my brain. But I have another thought about the first-time home buyers right now, and I know we're saying it's at an all-time low. There's been reports and predictions that came out here, over the last couple of years that the millennial generation is not buying personal residence right now. They're choosing to rent more so than buying and all this type of stuff. And I've been thinking about this. And this is my psychology background that I was going like, okay, well, what would cause a generation like that to fully go, I see the value of not having a primary residence as a personal, property I own and, actually getting a rental. And I started to think about, well, what did millennials as children go through in their households? For the most part, watching their parents go through one of the toughest real estate markets that we've ever seen. They all went through a time where they watched their parents in 2008, 2009, 2010, a lot of them saying, why did we ever buy a home? This is a disaster. We've lost so much money on the house. This has been an absolute nightmare. What do we do? Some of them lost their homes and then sat around the table going like, oh my gosh, real estate bank ruined us. It ruined us, absolutely ruined everything of our world. They lived through that. Like they, as children, lived through that. And I think we need to take that into account with how they're making decisions as they're going forward here, because what I'm watching and what I've been hearing from people is this millennial generation is now starting to go, oh, we actually want to start a family. And in this idea of starting a family, maybe we do want to buy a home. Maybe we don't want to be renters anymore. And we're starting to see that turn a little bit as they're starting to mature and grow up into this world. There's a lot of baggage they have that we've never talked about. I've never talked about it with anybody, but it came online for me the other day where I was like, in the ways we make decisions, there's a lot that comes out of when we're younger and experiences that we have that make us go, danger, danger, danger. I've seen this before. I don't know where I've seen it, but I feel like this is a bad place and I don't want to go there. And I think there's a lot of that going into that first-time homebuyer world right now.
That's a great point, Garrett. And I think it's going to be hard to find the stats on that because I think that time also saddled the two generations, kind of the younger millennials and the older Gen Zs.
Yep.
Right. And so every time people do data, they like stick it to the generation versus looking at, well, what if we looked at this bridge point of these two generations to see what was going on? Because you're exactly right. They were either in high school or early in college, or if you're looking at the older Gen Zs, maybe in kind of that middle school era during the 2008 to 11 recession. Mm-hmm. And that is the mindset that they have. And I also think that factoring in, and this is a prediction that I have, or just a thought that I have. It's not even a prediction. I think the only way that affordability is going to increase for people over time is if wages grow and household income grows at a faster pace, because the slow pace of household income growing compared to housing prices is what's holding people back from being able to afford homes. And you also have an outrageous rise in dual income households and things like that, which puts other stress in. And so there are a lot of psychographical kind of data points and concerns that really don't make its way into these charts. And so, which comes back to, Garrett, like, these predictions don't really matter for you as an agent. Real estate is one of the most, quote, I'll say, stable markets that exist, because it is a need. It is a basic human need. Housing, having shelter is a basic human need, and it's always going to be there.
Well, and I'd be curious to go down this route with you, Matt, maybe on a different podcast, maybe a different episode as we move forward here. But like, I look at affordability, and there are places in life that, I mean, I get it. We've been programmed into, you put 20% down, you get a 30-year loan, and this is what you decide of what you can afford. And every loan I've ever been quoted, they've been like, you qualify for X. And I'm like, I am never going to have that as a monthly payment. Like, that seems like a nightmare. I'm going to be stressed out every single month. Like, I guess you say I can afford that, but I'm telling you right now, I don't want to afford that. Like, that does not seem like a good game plan for me. And there's a place where you can sit back and say, well, what if we pause for a second and save some more money and socked away a larger down payment, more money to be able to put this? What if I didn't put 20% down? What if I did put down 30% or more to be able to get myself into a home where I actually have a payment that I'm like, I can handle that. Like that I can do. And I think that we don't talk about that enough. I mean, I think we look at it as everything is affordable on this like way the 20% is, and I'd be happy to have a conversation about this. I think it's a way bigger conversation. But I was just talking with an agent in Iowa, and they were talking about affordability. I'm like, what is a down payment to buy a starter home in your area? And I worked it up. I said, for a first-time home buyer with all the incentives, yeah, they can put 10% down. Let's say you do a conventional and you get 20% down. What if you put a conventional is like $20,000, $15,000 they have to put down to be able to buy a house? What's stopping you from taking a little extra time and saying, can I raise 20,000? Can I raise 25,000? And how will that affect my payment? And is that an affordable thing that I can do? And there's a lot of conversations that I think should be happening around all this.
Rather than without a doubt. Without a doubt.
Standard loans that we have. So
yeah, and that would be fun to go down that path, because you also have a large rise recently in the 3%, 5% down again, and also on a conventional side too, and how that impacts with private mortgage insurance. And then you get into different areas with HOAs and all these things. And it's the equation is not translatable nationwide, right?
100%.
And from person to person, because everything that's quoted is like the average, but there are a few people who fit right in the middle there, but it's an average for a reason, because it's all of these things. And so that's where, Garrett, I always come back to, and this is fun exploring this with you, is as a real estate agent, what should you be concerned about? I think understanding these numbers is important, because people want to talk about these things,
yep.
Right? And then the more you know about it, you can actually bring it down to the real world scenario for the person who's in front of you right now, and then be able to disengage their current situation from those numbers so that they can see their own path clearly, versus looking at the trends and saying, oh, I guess we're just going to follow along with that. It's like, well, hey, you're an independent person and you probably don't match the average perfectly. So let's talk about your situation and how we can help you get to where you want to go. Right. So anyway, I appreciate this. Garrett, you got a story you got to share now too.
Well, yeah, I was going to say, we should probably add that in, because otherwise I forget. And then we have people that are like, are you going to tell the story? Like, when are we waiting for this thing? So
yeah,
real quick. So obviously anybody who's listening to us for the last 6 years, Matt, knows that in my free time, I like to race. I race in a series called 24 Hours of Lemons. So if you ever want to laugh and have some fun, go check that out. Not Le Mans, Lemons. And what's funny is that they are it's a whole bunch of rookie racers to a whole bunch of really experienced racers, and the whole thing is, how can we keep this safe while making it fun at the same time? So when you come off the racetrack, you're on the track at 100 miles an hour with about 135 cars, and then you come into the pits, And their whole thing is like, you got to go 10 miles an hour. And if you don't go 10 miles an hour, we will find you and we will ruin your day.
Which is really slow. 10 is slow.
It's really slow. But when you get back behind pit wall, when you're actually in the pits and the paddocks, there's a lot of people that aren't thinking. There's people in helmets. There's people, they can't hear things quite. And there's a lot of racket and everything's going on. It's just a crazy, very fun environment back there. And so having a car come ripping through in 20 miles an hour, you're going to kill somebody is what's going to happen. So 10 miles an hour. Well, the funny thing is if you don't go 10 miles an hour and you get caught, they dress you up as Mary Poppins. And they put you at the very end of pit lane when people are coming off the racetrack, and they give you a big sandwich sign or a board that says, please drive 10 miles an hour, otherwise you will be dressed like me. And you have to sit there and wave the flag at people. I have not had to do this. It is hysterical though when you come off the track and Mary Poppins is standing there to greet you at the very end. And it's usually some dirty race car driver that should never be dressed in a Mary Poppins outfit. The second punishment is they saran wrap you to your roof with a bullhorn, and you actually have to drive through the pits at 10 miles an hour and announce to everybody that you don't know how to follow the rules and you're a moron and please don't be like me. So that's the punishment that you get when you are breaking the rules in the racing series that I'm in.
So don't break the rules.
There's so many other punishments that are so much horror. They're so bad, but those are just for speeding in the pits. So with that being said, everybody, thanks for joining us. If you like what Matt and I are doing here and you appreciate the podcast and you want to support us, because Matt and I really do this we just love doing it. We don't get paid necessarily to do this. So if any of you want to support us, we have a simple membership at Life at 10 Tenths. It's $10 a month, and you can just support us through that. It's so much appreciated, and I can't tell you more. If you want to go on a bigger
and you get
journey,
a little bit of extra things with that membership too. You get our Monday Mindset videos, you get our book insights. So you do get a little bit of extra value out of that too.
And then the other piece is you want to go on a bigger journey with us. We have a larger group coaching program. We meet every single Wednesday. We have a nice group of people that we all get together and we share ideas and thoughts, what we're seeing out there in the marketplace. Matt and I come in and teach a little bit, and then we open up for discussion and we coach people in real time. And there's a great amount of learning in there. And not only that, Matt, an amazing group of people that this is growing into. A lot of realtors, but we also have a lot of people that are later in their real estate career. And they're like, and I've had a lot of people come to me, Matt, saying, this is great because it's not just about real estate. It's about my health and my finances and growing and being the best person I can possibly be. And I'm excited to see it grow that direction. So if you want to come check it out, 7-day free trial, and you can come in and see what we're all about and all the things that are in there, because there's more than what we can just sit here and tell you about right now. And appreciate everybody. Matt, appreciate you. And everybody go have some fun out there.
Appreciate you, sir. Thanks everybody for tuning in. We'll see you soon.